Welcome, welcome, welcome. Thank you for coming back. You know it. You clicked on it. We're going to talk about insurance for risk engineers. But let me make y'all a little bit more comfortable because it's gonna sound boring, right? But if you want to be a risk engineer, the fact is that you're going to have to know a little bit about insurance, and we'll take you through it. I'll make it as painless as possible. Actually, it can be kind of rewarding for engineers for the right personality once you get into it. So let's take a look at what is next. We're going to talk about what insurance is, how we get it, and how we use it, right? So basically, insurance is a promise to pay. Now I'm going to talk about a few of the terms that we use in the big leagues of insurance: quota share, all risk. We'll get into exclusions and talk about what manuscript policies are. But first off, just over my head here, it gives you an idea of what a quota share program is with layers and towers. And this is for a complex program, and the participation has to be built in the market. The broker's role is basically to take all of the risk information and present it, and then to put together a program that covers 100% of what the client was looking to get insured. So they can be confusing. What you see sometimes is a bottom layer that's all retained by the insured. Maybe that's the deductible. And then the first layer above that, maybe only a piece of it gets insured in the markets. And what you'll see is that, the rest of that piece has to then be filled in. Well, it might be under different terms and conditions. So a quota share program can get complicated, and that's okay. It still works, and really the time when you notice the difference is when you get into the claims sometimes. The idea of an all-risk insurance policy is basically to make it so the insured doesn't have to wonder what's covered. At least that was the idea. Everything's covered except what's excluded. So now all we have to do is go to the exclusions section of the policy to find out what's not covered. It's a little deeper than that, but that's the idea behind an all-risk policy. And like I said, the exclusions matter so much. And I'll take you through a policy. I won't bore you to death, but I'm going to take you through a couple of the highlighted sections that every engineer that wants to get into risk management or risk engineering should understand about policies. A manuscript policy is one that's written by the brokers, basically to the benefit of the insured. Then they go out and get markets to subscribe to that policy. In some cases, especially in harder markets, manuscript policies are tougher to place, and we end up working with the capital or stock company policies, just off-the-shelf policies that we then try to endorse to make fair again. So that's just a quick idea of what manuscript policies are. Now, this is our buddies in Bulgaria, and it's a very unusual power plant. They had a great insurance program. It was great because it didn't rely on insurance for everything. The 7 blade liberations that I mentioned in the previous video, none of them were paid for by insurance companies. They were all covered by warranty, because during the upfront contract and negotiation, the owners brought in their insurance consultants, and we helped make sure that the warranties for this work were going to extend 5 years. We had 5 years of parts and labor warranties on these blades. So the site never had to pay for it. They did have to do some of the maintenance and some of the repairs, but because of the wording in the policy forcing the contractors basically to get to extend the warranty, this was covered. It didn't affect their loss history. Their premiums don't go up, because even though they had 7 blade liberations, their premiums weren't affected. All right, so what gets this whole thing started? How do we insure a big energy facility? As an engineer, I'm going to tell you it starts with engineering, and the rest of them will tell you that they're first and they have to trigger all the different things to get going. But the risk engineering, it's the reporting, it's to go out to the field, ask the site people the questions. So it's interviews, it's observing the characteristics and the conditions of the site. It's reviewing the materials, the reports, the procedures, all the documentation that shows that this facility is being well maintained. Okay, so those have to be finalized. And a lot of times it's tough to finalize a report because the information that the engineer needs to write the report is still at the plant. And until the plant provides the information, the report can't be finalized. If it's not finalized, it can't be marketed. So we need to get a final report. Then we have to have responses to all the recommendations, because when the reports get distributed to 100 insurance companies in the market, they're all going to have questions, right? And they're going to know the first thing is, what are you doing about the recommendations? So best to get out in front of it, say what you're doing about them. Do not say we're evaluating them. You know you're not evaluating them. Evaluate them now and tell them what you're going to do about it. Then the next thing is to respond to the follow-up questions, because we've seen that when you go market to 100 companies, that several of them will come back with a similar question. So we end up setting up a list of questions and a list of answers, and many times the same question will come from a different underwriter. So all we have to do is go back into that matrix and pull the correct question out for the underwriters. So it starts with the engineering. Get a good understanding of what the facility is, what the risk issues are, and what's being done about it. Okay, that's the engineering portion of insurance for large energy facilities. Now, the valuation. The insurers want to know, what are we insuring? How much is it worth? And I've seen valuations get skewed both directions in big magnitudes. The carriers get concerned because they'll insure a project for $100 million and then it has a $200 million claim. Where did that come from? So they basically started to protect themselves a while ago, looking at co-insurance for risks that were hard to identify the value of. And that way, the insured was going to pay a proportion of the loss along with the carrier, and that would hopefully ensure better reporting and maintaining of values. Now, a lot of the valuations in the energy industry get skewed not because of intention or trying to pay lower premiums. In fact, I have one client that was paying premiums on an extra $1 billion of value. Now, they had a total of $3 billion of value of substation equipment that had been out there for decades. And I remember we were out doing a loss control visit in one of the substations that was supposedly one of the most valuable substations on the system. And it was supposed to be $100 million value. We walk in and we see two little, like 10 MVA transformers, and there's just absolutely no way this substation can be worth $100 million. So we started to think about what was going on. Well, over time, in the old days, lots of small transformers were in there. We still saw all the pads, they were there, but over time, electronics get smaller and cheaper. And so all those old distributed transformers got removed and replaced with these two smaller ones that cost less and still did the same job. So what had happened when we looked across their system, we got their electrical engineering department to come out. And I know this isn't insurance, but it's valuation, right? You have to get the right values. Got the electrical engineers to come out. We said, today, if you had to build this station the way it is with those two transformers, what would it cost you to build? And we went through this exercise and figured out that out of the $3 billion, they were overpaying an extra $1 billion. That was a hard discussion to have with the markets. Believe me, they all wanted values to go up, and when they saw the facts, they realized, yeah, it's been going up. It's because of inflation, right? If you use inflation indexes that look at power gen or look at an energy industry as a whole, there's lots of fluctuations in there. But one thing, if you're going to build a big refinery or a power plant or anything with a lot of concrete and steel, it takes a lot of labor. If you're going to build a substation, you drive your transformer up on a truck, you lift it off, you set it down on the pad, you hook it up. It's very quick and easy. So substations, as the cost of labor went up and the cost of electronics went down, we saw a big divergence in valuations in substations. So it's something to keep in mind. We're going to look at loss history. You have to go back 5 or 10 years. The markets want to see how profitable this account was. I'll tell you a story. I met the first real London engineer that I got to meet decades ago told me that the big engineering firms have it all wrong, right? The insurance companies that have 1,500 engineers on staff, and we all know who they are with their two initials. He says to me, they have it all wrong. They have to cover all the salaries of all those engineers. And all we have to do is make a profit. All we have to do is look at your loss history to see how much money to charge you. And so that was his view in a nutshell. Was he didn't care what the engineering was. He didn't care if somebody said it was a good risk or a bad risk. He could tell by looking at the history. And that's all he needed to do. Boy, was that eye-opening for me. There's a big difference in how the world treats risk management. So next thing, after we get all the information, we have what's called a submission. And that's your engineering reports and the responses to the engineering and all the answers to the follow-up questions. And then values. We want to show them what we're insuring. How much is our car worth? How many cars do we have, i.e. buildings? What's our loss history? How good of a risk have we been? And do they need to make up? Or are we a very profitable account? And we can go in there and start pushing against price increases when we can show them that we were profitable already, even if it's a bad market. So the loss history is critical. And then whether you're negotiating a manuscript policy or not, that would be in the submission. These days, maybe just endorsements that you wanted, but this is what goes to the world, out to the insurance market to figure out how they want to insure this project. Then the underwriting starts, and the underwriters start looking at everything that was submitted, and they start, analyzing, does it make sense? Are they cutting $1 billion of value, out from the spreadsheet? Why are they doing it? What kind of questions do they have to get answered? And then they talk to their engineers, and they ask, what'd you see in the reports? What should I be concerned about? And then they'll basically negotiate up until, I think, the last minute, when they basically have to give a quote, and that's when we get our quotes. So once you get your quote, you got pricing, you got conditions, you got timing, you got the things that will define your insurance program for the next year. Okay, now that you've got your insurance, it's time to take a look at claims. And claims are fun because they really teach you insurance. And if you're like most people, you don't know what your insurance policy says about claims, right? Until you have a claim. When you have a tornado, hurricane, or any kind of damage to your house, fire, or your car accident, you really probably didn't look at that insurance policy until that day. So before we jump into what happens in a claim, and you're going to love it because we're going to talk about things that happen and how engineers get in there and can really influence the direction of a claim. So let's see, we'll bring it into the policy. Here we go. What you're going to see is that insurance policies have many sections. I'm going to get you to the very top. I deleted much of this so that you're not going to have to go through the whole insurance policy and watch me scroll all day. But what we've got is an all-risk property policy for power generation. You're going to want to make sure that you're looking at the right policy for the insured and that it's the right policy term. These are some of the important things. We'll scroll down and look at insuring agreements because that's kind of the meat of what's going on. What is the agreement? What do they agree to insure? We're going to look at what's excluded between property, perils, and then we'll look at valuations and definitions. You'll start to see that there's a lot of coverage that can pop up just from definitions and explanations. And we'll look at what the definition of an occurrence is because it's something that a lot of people get confused. So we'll just throw it out there now. I'm assuming that most of you engineers are going to just fast forward through this whole section, and that's fine. When you get into a job one day where you need to understand insurance, you'll come back to this video and say, okay, now what was he saying? So there's the insuring agreement. And if you look at it in gist, it basically says everything's covered except what's excluded. And that's why all risk policies are generally pretty good for the insured. They tend to be broad so that they're not named perils. Well, this one's a little bit different. But what's neat about this all risk policy, it's a broker's manuscript policy, it basically is saying that the cost to test for damage is going to actually be part of the damage. And the cost to test if the repair was proper, that's going to be considered part of the damage that gets paid for. That's not in all policies, and it's just something that makes this a broader policy, one that more favors the insured. Perils excluded. Let's see what they exclude. Well, of course, fraudulent acts, dishonesty. Now, defects. This is really fun. So, of course, they're not going to pay for defects, are they? Well, in this case, the defects are excluded, but then there's an exception to the exclusion. And the exception says basically it doesn't apply if all of the equipment has been fully tested and meets all the specifications. If it's been turned over and handed over, now it's not a construction issue anymore. It shouldn't fall under defect language to address the claim. So, of course, wear and tear. And I highlight the word normal under settling and shrinkage because the word normal is so powerful. Saw it in a policy where corrosion, it wasn't corrosion that was excluded, but normal corrosion was excluded. So you see here, it excludes against rust and corrosion. Whereas if it said normal rust or normal corrosion, that's a huge difference. Against the damage, okay, yeah, pollution, we're not going to worry too much about that. War, of course, these things aren't going to be, covered by the insurers. Insurrection. Now, valuation, we're looking at, and most policies say the lesser of. This policy says the greater of. That's the flexibility of a manuscript policy. And making it basically just something that's there for the insured. Now, generally, every policy has an experience of the business clause. And let me just say, I have it marked red because I've seen so many claims just get bogged down because the accountants will ask, how much money would you have made on July 13th if you hadn't shut down back in March? Well, if everything was normal, we would have made X. And they say, well, what if it wasn't normal because we see that there was a hurricane this summer, or we see that the weathers were warmer this summer? They want you to basically go back and second guess yourself. And it gets to be just a merry-go-round of here's the answer, and then another question. Here's the answer, and then another question. So I just pointing that out. Experience of the business is such a broad thing that makes it possible for the accountants to just slow the claims down to the point where everybody just says, let's forget it, and let's just settle to get it over with. Yeah, taking you through it. Be happy, boys. You're not having to read all that. And not slating on the ladies either. Okay, I know we have a lot of lady risk engineers. Here we go. Occurrence. This is what everybody needs to know. That just because the two parts break on different days doesn't mean that they were from different occurrences. I have a story where I told already, but basically a steam turbine has 3 bearings wiped on different days. The initial thought was too bad, those are 3 separate occurrences. Well, when you go back and look at what led to them, it was the skipping a step in the flushing procedure that caused varnish to go into all the bearings. Well, now when the bearings were operating, they started to wipe. Not on the same day, but all due to the exact same cause. So that, my friends, is what an occurrence is. And we'll come back over and talk a little bit about the real world again. Sorry for diving you into the world of insurance, but that's what it looks like. You're going to look at a policy, and to this day, I still have to scroll up and down. You're looking at so many policies as a broker that you can't answer questions, is something covered, to start with. Our licenses don't allow us. We're not offering the coverage. So it's the insurers that, will decide whether it's covered or not. But we do have licenses to sell and to talk about insurance. So let's just say that it's something that if you want to get into risk, it's going to be there. And a lot of risk engineers just put up the red flag or the white flag and say, I don't talk insurance. I don't know anything about insurance. Okay, you'll be more effective and a better risk engineer if you do talk about it and understand it a little bit. And understand when you don't talk about what you don't understand. That's a tough one, isn't it? So the claims process, I'm going to give you a slide that basically takes you through it as quickly and as succinctly as you can imagine. And this is something that comes up every time somebody has a claim for the first time. The clients that are pretty good and don't really have claims that often, they don't know the claims process. That's fantastic. I'm going to tell it to you real quick. Advocacy, we'll talk about it. The insurance company has their adjuster. He's appointed, he's third party, but he's representing them. He then appoints engineers and accountants that continue to represent the insurance company. On the client side or the insured side, you have your broker. Some brokers have claims managers or claims representatives that help you. Some brokers have claims engineers with insurance licenses so we can talk coverage. We advocate for the insureds. Policy wording, we'll get into some of that. I talked about just showing you a policy, what it looks like, and hopefully I still have many of you probably fast forwarded to here. We'll talk about claims engineering, what that is. So when a claim happens, the adjuster is an accounting guy, usually. He's like a numbers guy wanting to just count up all the invoices and all the costs of the loss. He needs someone to tell him whether that repair was part of the scope that would be necessary due to the loss, or if it's just extra work, or were they going to do it anyway and the loss had nothing to do with it. So they need engineers that can kind of understand refineries, power plants, and what it takes to reconstruct or repair a project or a piece of equipment. And then finally, we can get into disputes because, again, when we're trying to apply a promise to pay, which is written in words, to the real world, then interpretations come along and people can just have disputes. All righty. Now, let's talk about the process, probably the fastest, quickest synopsis of a claims process that you'll see. The incident happens. They call their broker and report it. The broker discusses a little bit of the specifics to find out, is the value going to be near the deductible? If the value is like 10% of the deductible, there's no point in reporting it to the carriers and getting everybody assigned and all the budget set up and all the contracts issued for adjusters and engineers and all that. So we kind of use some judgment as to whether to report it or not. And if it's something that could lead to business interruption, we always try to report those, because those are things that no matter how small the property damage is, the business interruption could be very significant. So we report it, and then we get an adjuster assigned. We set up a site visit with the adjuster and their engineers and accountants and anybody that wants to come see the damage. They have to see it. They then put out a request for information, which lists all the things they want in order to understand the loss, like SCADA and digital control output, so they can see the point in time when the vibration happened or when the temperature spiked or when the event occurred. They want to find that point in time. And then they'll give you this written RIA. Then we'll take the RIA, we'll answer other questions, provide all the documentation, start putting together the invoices and the purchase orders and putting them in buckets as to where they applied. And then the adjuster and their accountants go through all that and decide on what the right number is. They'll have a couple discussions back and forth, like, why did you keep this? Why did you buy that? Then they come out with a proof of loss, which is a draft. The client will then sign this POL that says, yeah, I swear that's how much we lost in this loss. And then they provide their payment details, like their checking account numbers or how they want a direct deposit and their W-9, and then they get paid. Then we just start monitoring all the payments from all the different markets to make sure that everybody paid their share. So that's the basics of a claims process. The advocacy portion of it, again, I'm prejudiced because I advocate for the insureds. And I've been in many intellectual battles with engineers who were technical, they were capable in engineering, and they just kind of stopped right there and didn't read the policy. And you kind of get to a point when you're arguing over whether something's covered or not, that you have to know what the policy says. You can't just keep saying it's not covered, it's not covered, it's not covered without ever looking at the policy. So eventually the claims engineers have to look at that. And brokers engineers will help find things like the difference between normal corrosion and corrosion. We had a loss, $2.5 million euros, 2.5 million euros actually, and it boiled down to they had crevice corrosion cracking occurring. That's not normal corrosion. That's very different, and it takes very special circumstances to set up crevice corrosion cracking. Well, if the policy excluded corrosion, they wouldn't have got paid. It excluded normal corrosion, so they got paid. That was a great one there. We tried to reach out to some of the independent engineering companies that do work with the insurers to see if they would work with the broker and the insured. And they said, "Are you crazy?" They said, "The first time I work with an insured, I'll never be hired by the insurers again." So the credibility of some of the independents just stands right up that, hey, if you're only going to work for one side, you're not really that independent. That's just my experience. All right. Now, the adjusters, what do? The adjusters, like I said, they're sort of the quarterback of the claim for the insurance company, and they're going to bring in the resources they need to make sure that the coverage is right, that there was coverage. And I will say most adjusters are really looking for something to hang their hat on. And, depending on your personal experience with adjusters, if you've only had one or two claims in your life and they were bad experiences, you might have a different perspective. But I've been doing claims for a long time, and I've seen some bad adjusters and I've seen some good adjusters, and I know what's in between. So there's a variety, but they're there to represent the insurers. They're there to collect the data and coordinate the experts, and then they write reports to the markets. Now, the first thing they'll tell you is, we don't decide whether it's covered. But in their letter to the markets, they say it should or shouldn't be covered. And they put the policy reasons why it should or shouldn't be covered. They can't tell the client that it is or isn't, but they tell the insurer what they think. And then the insurer turns around and says, no, we don't find coverage there. So anyway, it's kind of a game when they say that it's not them, but it's them. Next, we have the engineers and the accountants. These are technical resources, and this is an area where if you're out there in a refinery or in a power plant and you're thinking about, well, I want to get into risk engineering, but I don't really know all the fire protection. I don't want to do all that safety stuff. I just want to figure out what happened when it went wrong and, get it back up and running. Well, that's where claims engineering can come out. Okay, you have a chance to not only go in and figure out the scope of the loss, but say a facility loses a generator. A good claims engineer from the insurance company, he's going to want to go out and find that generator in the market. She's going to want to have that generator shipped to the site and made available so that the outage isn't a year. The outage is only 3 months. So they're going to look for ways. A good claims engineer is going to help reduce the cost of the claim, not just stand in the way of paying the claim. And believe me, there's an electrical engineer out there that we always ask for, because that's how he comes into every claim. It's like, how can we get you back up and running the quickest as possible? And then once all the documentation comes in later, if there's questions about what should or shouldn't be covered, we get into it. But he tries to help get the insured back up and running as quickly as possible. Disputes arise, and they're not fun. They start technically, and then they kind of spiral into legal battles. When both sides are not hearing each other, it doesn't take long before communication stops, and then you basically look for a third party to tell your story to. And it usually does not end up in trial, but the settlements, the big issues that I've seen come from policies that were issued, and the underwriters did not understand the coverage. And so when the claim happens and they realize, oh my gosh, we have a boiler that, $100 million boiler that's corroded, because they put a fuel in there they didn't design right for that fuel. Now we owe, because it was one design mistake that led to this abnormal corrosion. So it's not normal corrosion. So now we're covered. Oh, $100 million. We'll write you a check for 50. Is that good? And so the client is like, well, we don't want to be in court for 10 years. We'll take the 50 million now. So you see some big mistakes made, and then the policies tighten, and you may get called up to an insurance company's headquarters to explain your manuscript policy. That happened before. That's a fun experience. So disputes happen. We don't like them, and try to avoid them by being as clear as possible up front in the words of the policy. All right, losses. I'm going to talk to you about a couple losses because, like I said, it's not a John Muno video if we don't talk about the real world and things that have happened. So we had a construction project going on in West Virginia, large project, and probably one of the last coal power plants to be built in the United States. And as part of the construction, one of the phases is pouring the concrete. And when you pour the concrete for the turbine pedestal, for that big steam turbine, you leave pockets in the concrete where you're going to put your anchor bolts. And these pockets are like 2 feet by 2 feet by 6 feet deep. So they're just a big hole in the concrete waiting for you to put this 8-foot long anchor bolt that's 6 inches in diameter in the middle of that hole and fill it with grout. It's very strong to secure it in that turbine pedestal so the turbine generator doesn't vibrate over the next 40, 50 years that it's going to run. So what happened at our project? Well, they were expecting poor weather. They put some pieces of plywood over these pockets, and the poor weather came in. The rain, the freezing rain, the ice, the snow, it went into the pockets. The pockets filled with water that froze, and then the edges of the turbine pedestal just cracked and broke off. Okay, so now when we get there, you see this turbine pedestal. It's already poured. What do you do with that? It's in the way, and the faces of the pedestal are just cracked and broken away. You can see rebar just sticking out everywhere, and the workers are jackhammering the faces of that pedestal to get the rebar clear so that they can pour again. They're going to just go pour concrete right back over on top of all this. And I asked them how they were getting the rebar so clean. And they said, we don't know, it's just getting clean. It just falls off when we jackhammer it. And we did some research and we found out that what they were doing was each layer of the jackhammer was causing micro fractures. As they would chisel away some of the concrete, they create more fractures deeper in the concrete. So it was just going to continue to destroy the concrete if they kept using the jackhammers. They found out if they used hydrolasers, that they could remove that surface layer of loose concrete and still retain the strong concrete base that they had before. That was the civil engineering contribution to restoring or recovering from this claim. So it basically, it was good that they didn't pour the concrete back in on concrete that would have just come apart. But it just shows you that an example of how some minor thing about the way they covered those holes during construction led to this delay in the project, future doubt as to the strength of the pedestal. So bad mistakes at that project. That one was full of some lessons learned, we'll put it. We had a plant down in Louisiana with 4 gas turbines, and 3 of them suffered the same loss, believe it or not. The bottom line was that in the exhaust tunnel of the gas turbine, behind the steam turbine, behind the gas turbine, there was a expansion bellows that was there to allow expansion and contraction of the exhaust gas when it left the turbine, the back row of blades. And as the exhaust gases would go out, that exhaust bellows could expand or contract. Well, if you were to walk around in there, you'd step right through that bellows. So it was thought that we'll put a metal piece across the top of that joint and basically cover the gap that's sealed by the bellows. Well, after the first major overhaul, we kind of figured out what happened was they went in and a lot of the bolts in the inside of an exhaust tunnel are corroded to the point where you're not going to get them off. So they cut them off. They don't even bother. So they're just cutting them all off, fall on the floor. They've got all these rusty scab pieces of bolts, and they start to sweep them up at the end of the outage, and they put it all together. Well, After the first loss, we didn't really know what happened, but they found all this crap in the back of the machine. And they went and inspected all the machines, saw nothing wrong. There was no debris in any of them. Happened again on another machine right after the major. And again, when they went in this time, they saw that piece of metal over that gap and realized that it was hiding a lot of debris. And they went and inspected the other units and saw that too. So by the time they got it managed on the third unit, it was too late. So 3 losses, all due to a design issue that was, partly construction, partly, operations. Was it there intentionally? Was it there just temporarily? No one really knows, but it's an issue across the fleet of those units. And we were fortunate that it only got 3 out of the 4 that we had. So that's your stories for today. And keep writing comments. I love hearing from you. I want to hear what you're talking about. I did get a comment to dive deeper into some of the hazards. I'm going to do that. I'm trying to hit the top level of what being a risk engineer is for all those folks that are out there in the chemical engineering world, the power generation world, wherever you are right now. If you want to move to the risk engineering world, this is kind of where I'm showing you what it looks like from the higher view. And we are going to dig down and get into some of the more specifics. Now, if you want our underwriters to have a video of their own called Engineering Basics for Underwriters, let me know. I'm not sure how many underwriters watch the videos, but if you're out there, let me hear you in the comments. Thank y'all.